This ETF has a 32% yield and it pays weekly. My first thought was do zero research and throw all my money into it. When the oxygen finally returned to my brain, I realized that the weekly payout is a nice bonus because the main thing, a 32% yield is higher than any other income investment I own. I'm not saying I'm greedy, I'm just saying there might be something here worth looking into. I also thought, when do I get a daily paying ETF? What about hourly? When does someone from the fund put pennies directly in my mouth? New year, same me. Hi, I'm Raj V, financial goofball, and I have questions when it comes to QDTE, also known as the Roundhill Innovation 100 Zero DTE Covered Call Strategy ETF. And it recently printed a couple of monster weekly dividends, 80 and 87 cents. I'm not saying I'm greedy, I'm just saying that's not a bad way to close out 2024. What is this ETF? How does it work? What's the catch? And of course, is this worth my money? Is my golden piggy bank Earl getting another position? Oink! Thanks for giving me CPR, Earl. You saved my life. You imagine a small pig giving someone CPR? Don't. Let's talk about money instead. Per the website, it is the first ETF to utilize 0 days to expiry options on an innovation index, and it seeks to provide overnight exposure to the index and generate income each morning by selling out of the money 0 DTE calls. Wow, that was so many words. You know, a LaCroix would be really helpful to wet my whistle. This video is not sponsored by LaCroix, but it could be. So kind of like how normal investors don't get access to invest in companies early, we just get to buy Coinbase stock as it IPOs at the top of the market and make already rich people even richer instead. We also get limited opportunities to trade after hours. I'm supposed to make money when I sleep. How am I supposed to make degenerate YOLO plays? I mean invest if the markets are closed. That special privilege is also reserved for the big fish, not you and I. With this ETF, the average investor in some small way can get a piece of what's behind the curtain. And a quick look at the Roundhill website lets us know there's also 2 other ETFs like QDTE. There's XDTE and RDTE. They work the same way as QDTE, but XDTE is based on the S&P 500 and RDTE is based on small cap stocks. Look, Mom, I'm doing the thing where I give people more value than what they expected. 3 ETFs, 1 video. If you appreciate that, please let me know by tapping the like button. It lets YouTube and myself know to give you more content like this in the future. Now, of course, it's easy to miss given all the attention the massive weekly yield gets. There is a huge red flag for these ETFs that we're going to address. If you've ever traded options, you know that time is a very important factor in determining the options contract price. 0 day to expiry options basically have no time left. They literally expire that same day. So there's day trading, there's gambling, and then whatever the heck this is. Why would we buy into these ETFs? Well, this is where we need to evaluate the strategy and ultimately the most important thing, the results. I'm here for cash flow and I'm not a rapper. This is all I got. So effectively what's happening here is a poor man's covered call strategy, which means it's a covered call options trade. You just need less money to make it happen. Instead of owning the shares and selling options against them to get the premium, you actually buy another option position that mimics the shares instead. So we could be doing this on our own, but buying into the ETF means we let Roundhill make the trade and we collect the profits. In return, they charge a fee for their work. So what exactly are they doing? Based on QDTE's holdings, they're buying in the money options that expire a few months out. We see the same for XDTE and RDTE. These options take the place of the shares in a traditional covered call strategy. They have staggered positions, and I can only assume this is so they can minimize the options time decay, but that's a question for the fund managers, not random guys who make videos on the internet. Please believe me, I'm not a financial advisor. Really, I swear, I'm not. Stop bullying me. Oh my God. I'm not going to speculate too much further on that side of things. The reality is that if we buy into an ETF, we are buying into the fund manager's strategy and their execution on that strategy. It's our money, but their positions. If you think you can do better, that option is available. It's just going to require you to find your own positions and manage them yourself. So what's the other side of the play? Where does the income come from? Well, the fund managers are selling 0 day to expiry options on a daily basis in the mornings. So that means that they're making their money based on overnight exposure, which is different than any other income ETF I've seen. And because volatility can benefit options premiums, this fund can take advantage of that volatility after markets have closed. Sometimes companies have after-hours earnings calls that can shake up the markets. And newsflash, we are a globe. The sun is always up somewhere. Things that happen across the world affect US markets. The rest of the world doesn't just hit the pause button because US markets aren't open. So it sounds like we as investors have a chance to make money while we sleep. At the very least, so far, I'm intrigued, but ultimately, results matter. What does QDTE, XDTE, and RDTE bring to the table in terms of total returns? How well do they hold up against the benchmarks? How reliable are the dividends? And and how much can we expect to get paid. In terms of total returns, QDTE is up 19% since inception on March 7th, 2024, XDTE is up 18% since inception on March 7th, 2024, and RDTE is up 10.71% since inception on September 10th, 2024. Compared to their benchmarks, that's QQQ, the S&P 500, and the Russell 2000. For the S&P 500, I used SPY, which tracks the index to compare, and I used IWM, which tracks the Russell 2000. They're all pretty similar, almost a complete mirror of each other in terms of total returns. So overall, I would say all three have been holding up so far. Keep in mind, your overall results will vary depending on which accounts you hold your positions in. These do not seem to be structured in a tax-friendly way, so if you're in a taxable account, that is something to be considered. As far as dividends for QDTE, generally the dividend payout ranges from the low 20-cent range to the mid to high 30-cent range, sometimes entering 50 cents, even as high as above 80 cents. Keep in mind, these are weekly dividends. For XDTE, we see a general range from roughly 20 to 30 cents as high as the 60-cent range, and for RDTE, we can see a range from about the mid 20-cent to high 30-cent range as high as 59 cents. So now that we have that sorted, we have to talk about the downsides. There is no such thing as a perfect investment. They all have risk. It's up to each and every one of us to decide if we want to take it. With these funds, the money that comes out of them is basically determined by some person or group day trading. There's no way around it. For me, I'm pretty terrible at day trading, so I'm happy to let someone else who's better at it do it for me, even if it costs me 1% in fees. If the markets experience downside pressure, the fund's limited history does not suggest the yield will cushion the fall. QDTE fell just like QQQ did, and it was a mirrored move according to the total returns chart. In addition, volatility might be playing a larger factor than we realize, because if a move in the markets happens and the options premiums aren't moving around as much, there's less opportunity for the fund managers to capitalize on it. So we're actually wanting more volatility and price action in this case instead of a smooth, steady ride. This might be why we see some over and underperformance in the total returns comparisons graphs. And of course, the elephant in the holdings, these options, as they get closer to expiration, will get closer and closer to zero because time always moves forward. The fund could be losing value over the long term with no way to offset it, other than the premium generated from the daily sales. Because of the limited history, we'll have to wait and see how this all plays out to know for sure. There's over $600 million in the fund. Somebody somewhere thinks this is a good idea for them and their investing goals. The best part about personal finance is that it's personal. For me, I'm passing on these ETFs for now. I do like the fact that the ETFs can take advantage of the overnight markets, but I don't love the limited amount of data available. It's not a risk I need to take, so I'm happy to keep QDTE, XDTE, and RDTE on my watch list and revisit them in the future. I think there is value here for someone looking for weekly income, who's looking to track the overall indexes, but also is willing to let a fund manager trade for them and also wants to get in on the overnight side of the market. But of course, that comes with accepting the risks of losing money given the limited history, opportunity costs, and of course, the risks of the unknown. Now, just for fun, how much is it going to take to make $400 a month or $100 a week by owning QDTE? Assuming a constant dividend yield of 32% and with a monthly dividend target of $400, that's $4,800 a year. That gives us $15,000 needed in the position. I do love some fun math. This channel has the incredible ability to gather experienced investors together, so please consider subscribing for more content and let me know your thoughts in the comment section so we can all learn from each other. Hope you have a great day, and I'll see you in the next video.